reverse mortgage. I'm just a little unsure. Could you explain in the video? I was not able to understand the reverse mortgage. And if you can provide example, would be great.
Yeah. So reverse mortgage is mostly for senior citizens. So generally what happens is in the golden years, sometimes people will not have, they may not have ton of savings, and their
Hmm.
income goes down, of course, because they're not working, right? So they don't have their regular income, they may not have a ton of savings, and then some life event happens. Somebody has an illness, or they end up in hospital, and the person may need money, but they may have a house that's fully paid off, right? Because over
Hmm.
the years they've paid their house off, there's no mortgage on it. Now, in this case, what the person has an option to do is to actually get money out of their house. But the problem with getting money out of the house, so when somebody goes to apply for a home equity line of credit, for example, the problem is the bank will ask for income, right? So how will you be able to make mortgage payments on this amount? So let's say the house is worth 600,000. They want to pull out 300,000, but the bank will say, okay, how do you plan on making the payments? So when it's a senior citizen in that particular situation, they don't have income coming in to be able to make the mortgage payment. So that's why the bank will not give them home equity line of credit or a mortgage on their house. So the option then is to do a reverse mortgage. So in a reverse mortgage, they're not giving them the full 300,000 or whatever the amount is. Instead, what they will do is they will give them a certain amount every month, right? So let's say they approve them for 300,000, but they're not giving them 300,000 in their hand today. So they'll say, we'll give you 3,000 every month, right? So every month they get $3,000. And so that kind of becomes like their income that they can use for whatever they need the income for. And in this case, the amount, so the mortgage will grow. So normally the mortgage declines, right? The mortgage amount goes down.
Sure.
So let's say somebody started off with a $300,000 mortgage. When one payment is made, some principal is paid down, another payment is paid, more principal is paid down. So basically, your mortgage is getting smaller as time goes on. But in a reverse mortgage, it's getting larger. So first month, the mortgage
Hmm.
became $3,000 because that's how much they took out. Next month, it will become 6,000, then another 3,000, like 9,000,
So
and then
pretty,
12,000, right? So
sorry
it's
to
going
interrupt.
up.
Pretty
Mhm.
much you have paid, let's say you have paid it off, but now it will, as
Mhm.
you're borrowing over the time of 5 years, let's say, because of an urgent issue, that 5 years times the 3,000 every month will be again borrowed towards the housing, right?
Right.
That's what the
Yes.
idea is here.
Yes.
Now,
Um,
would the interest
yeah.
rate still
And
remain the same, or like, because what if someone has paid it like in 1980s? I'm just little, how is the bank working on this? Or is that nothing to worry on our end?
no, it will be the same. There will be terms, right? So there will be a 5-year term, and then it would
Okay.
renew at a different rate, just like normal mortgage does. From interest perspective, will be the same as a
And your
normal
house has to
mortgage.
be paid off in this situation, or can
House
it
has to
be?
be paid off. Yes. And they will also only let the person borrow up to 65% of the value of the house or something like
Okay.
that, right? So different banks will have different amounts, but basically that's how much they will have to do. And then another thing would be, so how do they pay it off, right? So in this case, they're not paying off the mortgage. Once, so the person who has the reverse mortgage, so either they pass away and then the estate will sell the property and pay off the mortgage, or they downsize or something, right? In that case, the house again gets sold, and the mortgage will get paid off. So the person's not actually paying the mortgage off but
So
something will happen to the property, right?
so
Down the
let's
road.
say 5 years they borrowed, and then the sixth
Yeah.
year they, because they have no income, they decide to sell it. So from the
Mhm.
selling, they will recover that money and give it back to the bank.
Correct.